Welcome everyone, Stock Charts Technical Analysis. Let's get right into these charts. Leave me a thumbs up at the end if you find some value here. Take my training course if you're interested in learning how to use technical analysis to find trade ideas and manage trades. Let's get right into the chart. So, just in general, not a big change from today, from Friday. We're seeing a little bit of a pullback, nothing impulsive. So there's no real sell signals, or I'm not seeing anything that is too much of a change from Friday. So let's just point that out. There is one interesting item I want to point out, and I'll point that out here in the video. NASDAQ futures. All right, so here's what we got. We've got the uptrend line right here. This is coming off the October low, so we had this nice uptrend line on the futures. Got a sell signal right there. That was the sell signal that has been a back test so far. So you can see we broke down, did a full back test. They overshot it. This was Friday's action where they just kind of overshot it. But again, end of the day on a Friday, anytime you see some sort of a breakout or a breakdown coming into the close on a Friday, towards the end of the day, it's not market consensus typically. It's usually a very thinly traded market. There's not a lot of participation, so markets can move. But really, what you want to do is be able to read where the market consensus is at. Where's the institutional money going? Where is just the market as a whole putting their bets down? And so thinly traded markets is not the market as a whole. So we popped, and then since we've faded back below. So in general, this continues, let me extend that out. This continues to hold as resistance. To me, it looks like we're having a little kickback rally and then going to continue to kind of work our way lower. Again, we've already hit that resistance line and we've been rejected. Not super impulsive yet. So we need to see a little bit more impulsive selling for that to really confirm that this is the rejection. Otherwise, you can continue to backtest. You can just backtest and backtest, kind of grind higher and then reject, or you can always recover that support line. That's always completely possible. Although, they made it look like it recovered it right here and it has since failed. So that's one failed attempt to recover that as support. So we're, as far as I can see, we're basically near resistance. SPY futures ES. This one has a little bit of a different look. Little more bullish on this one. And you can see here, this is your upward price channel that the futures have been in for quite a while, going back to November. Two false breakdowns here. We had a breakdown here during the holiday trading season. Very thin market during that. So I pointed out that breakdowns during that time are not, usually not market consensus. And then we had another breakdown right here, which is since recovered. So two false breakdowns. Now we've shot to the upside. We're kind of trading around the upper end of this upward price channel. So in general, I don't see anything right now that tells me either way. I don't see this as a sell signal. I don't see a short here. But equally, I don't want to be long because of the major resistance that lies just overhead, which is sitting right up here. I'll show you here on the SPY for SPY traders. So again, on the SPY, it's a little bit different of a look. You've got this upward price channel right here. We broke down. Here's the first breakdown. Here's the second. They recovered it, and we're just still within that price channel. So there's no sell signal. Trend still remains up, even though, you had false breakdowns. But major resistance is sitting overhead in this blue line right here. And you can see that for anybody that's new, I pointed out a lot because this is kind of my major thesis around being bearish, essentially, comes back to this trend line here. So here's your 2009 lows on the SPY weekly, and you can see this is your bull market starting from the Great Recession. You've got reaction there, held a support here and here, held the support all through here. Then in 2018, the trend broke. This is when the Fed started really stepping in. And reversed their interest rate hiking. They were hiking rates and reducing their balance sheet, and the market broke trend right here, and the Fed did a 180. And then what did they do? Well, they created a back test of that trend line, and then it rejected. it's funny how the market really cared about COVID only after it had really done, when it was at major technical resistance. The point is, COVID didn't just become obvious to the world right here at this very moment, and then it sold off. There was rumblings of COVID all through December, all through really, I think going back from November and stuff, there was rumblings of it, but the market didn't seem to care about it. And that's why the market's technically based a lot of the time. It rejected here because we were at that major resistance. That's when it sold off. And so here's your COVID drop. Fed stepped in, went nuclear with more stimulus, pumped it back up, and here's where we're at. We're sitting right in this area. So not an area I want to be, adding to longs, not an area I want to be, getting long. If you are long, fine, you can stay long, but, I look to start taking shorts up near major resistance, and if I was long, I would be looking to probably take profit, but at the same time, you could wait for a sell signal, which we do not have to take profit. So obviously, there's hourly chart, there's your upward channel, and we remain in that channel. Looking at going back to the daily, still have negative divergence. This one, I don't know what happened to my line here, but negative divergence remains intact. Again, these things can just build and build and build. And there it is. Pretty big negative divergence going back all the way to September. And it just continues to build all this price action all through, really through here. The negative divergence on the SPY didn't show up till about right there. This was a divergent high. So all this price action right through here is divergent high. And this is going back to November. So a couple months worth of divergent high price action. I think it's very likely we get some sort of sell signal that's going to wipe out all these gains. And that's very easily done. Remember, this COVID drop, if you look at this COVID drop, this thing wiped out. It went at its lows going back to right here. It pretty much brought us all the way back to 2016 price levels. So it wiped out years worth of gains in just a few weeks. So to say that we're going to wipe out a couple months worth of gains in maybe one day, completely possible. That's how the sell side works. Here's the triple Qs, tech sector. Here's your hourly chart. So here's what I got. Here's your October lows. Here's your uptrend line. But it's a bearish rising wedge. That's the pattern that this put in. So we broke to the downside, but then they did a back test. Broke, back test. But again, that back test has still held. There's no, we are still holding up here at resistance, and this is still proven to be resistance. So break, we got a gap down today and a little bit of a kickback rally, but I think it's likely we roll over and head down towards the 315.13. We break that. I see another level right around 313.91. We break that, and I think we start to, we do start to head lower. Here's a major level of support down here around 298. So I think if we start to break these levels up here, the probability really gets increased that we're going to run down to this 298 area. And that's a gain of, if it was to roll over, that would be a drop of about 5-6% or so. And that is, that's kind of what I'm expecting it to happen. If you look at the daily here, you can see negative divergence continues to build. This has not been negated. This technical formation and the momentum is still there. So that's what I'm saying. Not much has changed today. Momentum is still pointing bearish. This momentum with this negative divergence is pointing bearish. It's saying, okay, momentum is fading. There is still bullish momentum, but it's fading. There's a change. We're trying to understand the rate of change. Momentum is there. It's starting to change. That often forecasts a price change. So price is still up. It's potentially starting to change. That's what I'm trying to point out. We don't have it yet. We don't have a full sell signal. Although if you go back to here, really on the daily, this was a sell signal and this was a back test. So ultimately, you can short on back tests. I'd look for some sort of an impulsive breakdown, though. I think an impulsive breakdown is probably going to be a good solid sell signal that we're looking for to bring this down to 298. Or you can just buy the dip. That's what a lot of other people, they just buy the dip. And yeah, that's worked for them for quite a while, but works until it doesn't. So IWM, all right, on the hourly chart, bearish rising wedge right here. That's a clean bearish rising wedge. False breakdown during the holiday season. Again, that was, you don't want to believe, I don't, during the holiday, my videos were really light during the holidays because I just don't make a lot of moves during that time. It's really a thin market. I want to see what the real market's going to do. And then we actually got a sell signal right there. We had the breakdown sell signal, but then they did a full back test. Again, this market is extremely bullish. The sentiment is extremely bullish. And so, there's euphoria in a lot of stocks. And so any little dip, they're coming in to buy, but that doesn't necessarily mean that it's not an objective area to short at. Again, when everyone's bullish, there's no one left to buy. That's essentially how it works. So just because the market's extremely euphoric doesn't mean that prices are going to continue to ramp higher. This could mean that prices have reached their high or near. Again, tops, they don't usually just get rejected instantly. It takes a little bit of time. They have to kind of work their way out. So again, we're just bouncing up to resistance. This has held so far. So again, I don't see any technical change in this chart. I think we broke the bearish pattern, have a back test, and we're still below that resistance. So again, it can gyrate, around here, kind of grind around, chop through it a little bit. But I do think we're going to probably reject at some point, sell off, and work our way lower. The long bond, TLT, I started really getting focused on this in the last few weeks. And all right, so the long bond, if you look at the hourly, we have bullish divergence right there on the hourly. And we continue to make kind of new lower lows, but the momentum is saying that there's likely to be some sort of a bounce. Now this is just an hourly chart, so the bounce might be muted. The daily here, there's no bullish divergence. It's just bearish basically. Bearish momentum, bearish price action. So I don't see any swing trade reversal signals or anything indicating that we're going to see a longer term reversal. And if the long bond continues to sell off, it's going to raise interest rates. They've already gone up pretty quickly. This is a pretty massive sell-off in bonds. I know it doesn't seem like a lot. Again, I use logarithmic scaling, so that also kind of hides the scale of the move. But also, if you look at really this thing started selling off here and it's down 3-4%, that's a good size move in the long bond. I mean, you start to see those moves and interest rates are rising very quickly. So mortgage rates are going up. Refi rates, which has been a big part of the mortgage market, are going up pretty quickly. Those refi rates in the mortgages, if they raise just a little bit, it doesn't make sense to refi anymore because a lot of people have refied from pretty low rates, and if they raise up, there's really no savings. So the refis just kind of dry up. This can hurt the mortgage market. It hurts all markets basically. That's based on a credit bubble, which is what I think this market really is. All right, so long bond, I don't see anything bullish at this time. There's no reason to get long this thing. We'll just continue to see what it wants to do. There is some support right down here around 148, 149, depends on when it actually gets there. Gold, all right, so gold is, from my perspective, gold is at it is at support. I pointed that out on Friday. When gold sold off, it pretty much fell right to support right here, and I expected a reaction. We're seeing a reaction now. This is a reaction. Reaction doesn't always mean you're going to get a bounce off support and upward prices. Sometimes it means you just take a pause or consolidate and then continue lower. So I don't know which one it's going to be at this point, but it is consolidating right here, and it could easily break this support level. I don't have a good read on which way it's going to go. So the way I'm playing gold is in a longer term bull market. This is a daily chart. Really, here's your 2018 lows. Really back in 2015 this is when the bull market actually started. You didn't know it at the time because you never know at the beginning of a bull market basically. But here was your lows, and we basically have been moving higher, trending higher ever since. Higher lows and higher highs. So I would expect that trend to continue until that trend is broken. And so what I'm looking for is, I bought a little bit on Friday at this support. I don't know if it's going to hold or break. If it holds, then we could be looking at the next leg higher in gold. If it breaks, I could see us coming all the way down to somewhere in this area around 1750, 1720, somewhere in there. I don't think we'll undercut it, but even if you do undercut it, it should hold. So I would say 1700 to 1750 would be the major area of support. That's kind of your longer term bull market support area. And so I would be a buyer down there. So the way I'm treating it, we're at support now, buy here. I did buy on Friday. I'm not, completely loading up, and if we come down to this area, buy some more. I'll probably be a little more aggressive down here at this support area. And that's if it gets there. I don't know if it's going to get there. Looking at the daily chart, there's no divergences. So I got this line marked out, but basically we have downward price, downward momentum, upward price right here, upward momentum, downward price. No, there's no divergences. Price is moving with momentum right now. And so what I like to look for reversals or trend reversals is divergences. And right now we don't have that. So I could easily see us, going lower and then maybe putting in a bullish divergence. Until then, we're just going to have to continue to, buy at support and see what happens. The dollar broke out. All right. So that's one reason why gold sold off. And that's something that the market, I don't think has caught on to yet. So I'm very interested in looking at, short positions right now, because a dollar that's moving higher will put pressure on the market, but we're in a very euphoric market. So they're not going to catch on. They're usually late to the party. The smart money might be, starting to take some short positions, but the euphoric money, we don't have to call it the dumb money. We'll just call it the euphoric money, because it's been the right money. Let's put it that way. It's been the money that's been making money lately. But it's the euphoric money. It's the hot money. It's the money that's chasing momentum. They'll chase that momentum until the momentum dies. So they don't know that things are changing. They wait until the momentum dies, and then they all rush for the exits all at once. That's how that works. So if you're fast, then you can get out, but usually it's going to come in the form of a gap down. It's not going to allow people to just get out with all their profits. Here's your dollar breakout, and here's a daily chart here. We've got the breakdown, bullish divergence. There it is. I pointed it out in advance, and there's your breakout. So that's pretty impulsive in the dollar too. I think, obviously, we're getting a little, this was a good move, a good breakout. We're getting a little bit of a reaction, trying to see if we have any support, resistance. The dollar is not the cleanest chart for me to actually chart. The major level there's a big level of resistance up around this 92, 91 area. Well, it's not 91. I've got it at about 92. So I think we get up there. This is a nice breakout. Maybe we get a little consolidation and then continue working our way higher. But this is a breakout of that bearish pattern. Daily had bullish divergence. So I think we got a trend change right now on our hands where we're going to kind of, work our way higher. Once we get up here, we'll have to see. If we break above this, then I would look for all the way up here at 97. And if we get to 97, 96.50, look for a lot of these gains, these euphoric gains in the market to unwind. So what I'm trying to point out is you can look for, you can anticipate the next move and maybe it plays out, maybe it doesn't. Or you can just wait for the momentum to break and maybe give up a lot of your gains. That's what I'm trying to point out. I'm trying to point out that it looks like there's some changes happening under the kind of under the hood. Dollar going higher. So I'm starting to really watch this. I think this might be the next big trade. XLV, again, I pointed out in a couple of videos back, I cut this short. It just was kind of dead money, just not moving, just grinding around. So I just cut it, and it's back testing again today. You can see that this trend line's been this pretty validated trend line right here. We've had lots of reactions. It's right at resistance now. No negative divergence, though. You can see it kind of burned through it right there. Looks like it did. I mean, there's a big negative divergence going way back here to January 2020. That's still intact, but the most recent one kind of got burned through. It's just not that interesting to me, so I'm just gonna, kind of watch it. XLF, no real change from Friday. Bullish momentum, bullish price action. Again, this will likely sell off if the markets reverse course. So, if the dollar continues to rise and the markets catch on, XLF's not going to do well either. And energy hasn't quite caught on either, which is a little interesting. So I mean, it's still the reflation trade is what everyone's positioning for. That's what this market is saying, reflation. And I've heard that pretty much that's market consensus right now. Everyone's basically betting on the reflation trade. Oftentimes when everyone's betting one way, the market does the exact opposite. So just keep that in mind. But, oil is, here's XLE energy moving higher. It's still at resistance right here, 42, slightly above right now, but not an impulsive breakout yet. The dollar is moving higher though, so oil's going to have pressure if the dollar continues higher. I could see us, again, here's this is an island reversal cluster right here. Oftentimes you'll backtest these things and kind of cut into the middle area. So I could see us coming up into about right there of about 45, 44.50. That's usually a stop running zone, or they'll pop it up in there and run some stops and then reject. So watch for that. Negative divergence on the daily right there. So if you pop up into that area, it's going to be a divergent high. That's likely to be a stop raid. And then they reverse course and head lower. Okay, watch these fangs, because if the fangs are moving up, the market's moving up. If the fangs are moving down, the market's moving down. It doesn't really matter what the rest of the sectors are doing. These are the heavy hitters in the market. They control a big percentage of the S&P 500. So I don't see anything right now that's interesting, but just want to point out, you've got an uptrend line here on Apple. Daily chart, and you have you're starting to crack this support line. You can see we're kind of chopping around here, but it's not impulsive yet, so we could easily recover, chop around some more. Nothing that's a sell signal in my mind. I like to see impulsive breaks of support, gaps, gap downs, things like that. So just watch it, keep an eye on it. Microsoft, nothing really interesting, just kind of this big sideways grind zone. Amazon, same deal, big sideways. I mean, this thing, if you look at it, it's been dead money since July. We're going on, what is that? Going on about, 186 trading days? It's a long time. So Amazon, as of right now, is kind of topped out. Doesn't mean it's going to sell off, but it's not moving higher. And this might still be the top of Amazon in this bull market. We have a head and shoulders right here. That hasn't been negated yet. We still have that head and shoulders. So look for, if we start to sell off and break, it's going to potentially confirm that pattern. We had negative divergence right there. This is a divergent high right in here, and you can see that was the high. So again, watch that. Google's still, Google's setting up in a bearish rising wedge. It's still kind of grinding within this wedge. I don't see any sell signals. It's just continuing within this wedge. Okay, these commodities like Joe, wheat, corn. I pointed out corn. I sold my corn. I think longer term I like it, but with the dollar breaking out and going higher, I think it's going to put some pressure on these soft commodities. And so it's been a good run, but I'm looking for a pullback in this thing. Looking at the daily here, you can see this is the downtrend line that I had in corn going all the way back here to May. We had 3 reactions. So there's your second reaction there. We had a third reaction right here, and then we broke out. But now the dollar's starting to rise. So usually when you see these breakouts, look for a back test. So I'm looking for a potential back test down to this 14.12 area. And then that should hold as support. That's kind of the area I would be interested in buying this thing back. How far down is that though? That's a ways down there. It's about 10%, 10, 11%. So maybe we work our way lower, get that back test. Maybe we don't. I don't know. No negative divergence right now. You can see here the daily momentum is just bullish, and there's no negative divergence. So that's what that, as of right now, this is a very bullish chart. It's just the dollar rising doesn't bode well for these commodities. Zoom here. I haven't talked about this one for a while. Basically, all I really want to point out on this one is this is showing the momentum, I believe, fading. Zoom was the high, I think the biggest gainer last year in 2020. And it's just been selling off ever since, this high right here. This high was forecasted with negative divergence. You can see here on the daily, we really started to show negative divergence right there. So this was a divergent high. This was a divergent high. See that right in there? These were divergent highs. And then we broke trend support right there. And we haven't looked back, basically. It's sold off all the way down to this 341. And that's about a 50% drop. And you can see here down about 50, it's about 42% from the high roughly. I know that doesn't look like a lot compared to what it moved up. But again, I use logarithmic scaling. If I turn off the log scaling, you can see it's a little bit of a different picture. And this drop here, if you look at from the high down to where we're at, has dropped about $250. That's the same as a move from the bottom up all the way up to about right there. Yeah, about right in there. So you can see that, this is a pretty sizable drop, and it continues to look like it wants to go lower. I don't see anything that says it's not going to. Now, we're building some bullish divergence right here. You can see we're starting to kind of put something in, but I don't see anything definitive yet. And really, I'm not trying to chart this one right now. I don't see a trade in it quite yet. And we also have a gap right down here, so I think we're going to fill this gap. We haven't quite filled it yet. But the point is that this is momentum. This was a momentum trade, and this is what it looks like when it sells off. So we'll continue to look for other momentum trades to fade, and especially these stay-at-home trades. So speaking of that, let's look at Peloton. That's a stay-at-home trade, very similar to Zoom. And you can see here that we have negative divergence on the daily, right there. We have, let me go back to log scaling. Here's your trend line right there. Broke trend, back tested right here. This is where I got short right there on the December 22nd. And we've been rejected and selling off. Little kickback rally, but again, that's how this works. You're going to sell off a little, kickback rally, sell off, kickback rally. Eventually, everyone catches on, and then you get the big waterfall selling. And that's typically where, when you're short selling, you're going to look to cover into some of that extreme weakness. But as of right now, we're not seeing it yet, but we are below resistance, and we are looking weak. Negative divergence right there on the daily. PPO, bearish crossover. Just looking for price to move to the downside now. Someone asked me to run through ZG, so let's look at it. ZG, all right. Here's your uptrend line coming off the March lows. Nice clean trend line. Broke trend right here. We did not have negative divergence though. So when we broke trend, no negative divergence. Broke trend, back tested, made a slightly new high and put in negative divergence. It really showed up. Negative divergence on this thing showed up right there. So you had negative divergence there, did another back test, which really extended the negative divergence. Yeah, when you have an equal or lesser high on the RSI, that just extends it. So equal high, basically, I think it's slightly lower actually than this previous high. On a higher price, that's a divergent high. Backtesting resistance. And so we're below resistance with negative divergence, and we just continue to backtest. I think this is likely to start chopping sideways a little bit and then reject lower. So that's what I'm thinking, and if you see here, we also have this doji here. We don't have follow through today yet. Maybe we sell off into the close, and get that follow through. But there is this doji candle right here that indicates a potential reversal if you get confirmation. No confirmation yet, but the day's not over. So that's all I see on this one. It's just kind of working its way higher in a back test. Again, when you have a really strong momentum market, traders, they're going to buy every single dip until the momentum really breaks. And you know, and the late to the party momentum traders, you know, they bought late, so they're going to continue to buy the dip, thinking market's going to go a lot higher. Only when they get proven wrong and are losing money do they panic sell, and until then they'll just continue to buy the dip. So we got to, you know, you have to wait for that impulsive breakdown. Tesla down a little bit today. This isn't what you're looking for though yet for big selling or impulsive selling. This thing's up crazy huge, so a 5% drawdown, that's nothing. So we'll watch this. If you go to the hourly here, you know, yeah, I think it's probably likely we come down to this trend line right here, about 767. And, you know, most likely the dip buyers will be there to buy it, but or we gap down and break. But as of right now, pointed down, you can see let's look at the daily here. Yeah, momentum's still up on the PPO. You can see we're still pointed up. RSI, though, has on the daily negative divergence, big negative divergence. That's really been this huge overshoot. This is just a bubble, basically. But this huge overshoot right here has been all divergent price action. So momentum is fading. It's just, there's just crazy strong momentum, you know. So we're fading from really, really strong momentum, fading a little bit. That's what this is basically saying. No huge sell signals, but again, everyone knows that I'm short this. I started shorting it up in this area. I forget where I actually started the short. So I'm down a little bit, but again, you know, this is just a counter trend trade, high risk. So everything in this video is not trading advice. I don't recommend anything. You know, these aren't recommendations. These are just ideas. I'm pointing out what I see in the charts. And how I'm positioning and how I'm trading, and that's all this really is. I'm not a financial advisor. And we'll wrap up with Citi here. Citibank. All right, so here's what I'm looking for. We don't have it yet, but if we get a gap down from this cluster area right here, let's say we gap down to here, we're going to have an island cluster top reversal. And it's just, I don't know if it's going to show up, but if it does, recognize it when you see it. That will be a reversal pattern that we're likely to sell off from. So whether we get it or not, we'll wait and see. As of right now, here's your RSI. You've got negative divergence. Nothing's changed there. That just continues to extend. PPO, we got a bullish crossover. So again, these can be kind of whippy, but it has, you know, bullish crossover, but you still have negative divergence on the PPO. You can see it right there where, right there, we were still, you know, we're making new highs in price, but less momentum. So, you know, that's what I think is going to show up as a gap down and get that island cluster reversal top. Until then, you know, we've got upward price action and momentum starting to fade. And that's really all I see in the charts as of right now. So if you guys want me to do a subscriber stock pick video, I haven't done one of those in a little while, leave a comment below of a stock you want me to look at. You know, usually in these videos, I try to point out the things that are interesting. And if I don't point it out in the video, I just don't see any real change from maybe the previous day or the last time I covered it. And so it's just, there's nothing to really talk about. I try to point out the things that are changing or the trades that are potentially, you know, really interesting at this moment in time. So if you guys have a stock you want me to look at or something that you guys are in, you want me to run, you know, an analysis on it, leave it in the comments below. I'll kind of gather those up and then put together a subscriber stock video in the coming, in the next few days. Thanks, guys. Appreciate it. Catch you guys on the next one.